Well, welcome to the program, Easton. It's great to chat.
Simon, thank you so much. I appreciate the opportunity.
And we won't talk cricket and the West Indies. I know we've had a quick chat offline, but I still remember in my heyday, in my youth, the heyday of the West Indian cricketers and watching Malcolm Marshall and these guys charge in. It was something else, and I still revere those cricketers like nothing else.
Yeah, it was a great part of my youth, and good for you is that of late it's more thinking about people like Glenn McGrath and those guys who took over from the West Indies and are still doing a great job. So kudos to you and the Aussie team.
Absolutely, we'll have to enjoy a beer one day and watch a session of cricket. That's for sure.
Yes, absolutely.
Now, I always ask my guests, why Treasury, and how did you choose Treasury as your career?
So Treasury was actually a chance encounter for me. I was wrapping up an assignment at Bank of America, which became Fleet Bank, and was in the zone where I needed to move on to another assignment, and something temporary came up at BCG, and I said, sure, I'll do it because it was cash forecasting. It's something I really love. And I got in, the assignment ended, but they had a full-time role. And having worked there for 6 months, seeing the culture, seeing what they were doing, I was really pulled into that, and seeing the broader world of Treasury really opened my eyes to it. And I said, whoa, I like this, and I would stick with it. So it was a temporary placement that has become my career and my passion in the profession.
So just for the listeners, you started your career with Fleet Bank or Bank of America. You moved into corporate treasury with Boston Consulting Group, BCG. In the consulting sector, which you ended up, after that short stint, staying for 7 years.
Yes.
You then moved to Rogers Corporation in the manufacturing sector and had another 7 years there. But the lure of the management consulting world brought you back, and you've spent the last 6 years as treasurer with Bain Corporation, obviously also within the consulting space. So
yes.
What would you say have been the highlights of your career so far?
So I would say, first off, before even getting into BCG, it was being an immigrant coming to America and getting into a solid corporate finance role, where I could say, because in those early days, it's a challenge of, I need to get working, I need to start to support my family. And so getting into a space that was comfortable for me, having worked with Procter & Gamble in Jamaica, I wanted to get back into that top level corporate environment. And that's what I got from Bank Boston. So that was a key highlight for me at that point, getting into the corporate world. And then at BCG, I would say it's the culture, working for an elite consulting firm, seeing how businesses perform at a very high level, that customer focus of transformative work, and also a culture that encourage fun as well as hard work. And importantly, getting into Treasury. So I was young in my career as a Treasury professional then. So for me, the benefit of BCG was getting me into Treasury and really opening up that world for me to see what was possible. And with Rogers for me was the key development phase, where I got in as a manager, left as the acting treasurer. So if you think about the different levels there of really maturing as a treasury executive, that's where it happened for me. And then with Bain, it's about putting all of that together to own that function and to lead the group for the organization. So different aspects. I would say if we look at Rogers, it was financing M&A, making recommendations to the board, and helping to lead the firm through the recession. Because when I joined Rogers in 2007, as you know, very soon after, we were in a tailspin. And so working through that time of helping to manage the financial reins, helping to lead the company through that period was quite rewarding for me and for the company as well. And then coming into Bain, it's about coordinating the financing of a global entity. We're in over 35 countries, over 50 offices globally. Every day there's a dynamic that you have to react to, while at the same time looking at your key initiatives. And so I think for me at Bain, it's the whole idea of keeping the trains running and looking to make improvements at every point, balancing those two competing objectives. How's that?
In terms of, you mentioned 2008 and the tailspin at Rogers. We've obviously just been in a pandemic, or are in a pandemic as we speak now. Have there been a lot of similarities, or what have you seen, from a treasury perspective as being the real challenges through these times?
And good question. And so if you think back to 2000, 2001, in that period, we had a recession, and then we had a 2007, and now we have this one. So in a way, each one built on the other in terms of the learnings we get from that. Because in the early 2000s, it was coming off a really good internet boom when I was at Bank Boston. Bank Boston was supporting IPOs in San Francisco at a terrific pace. It was a heyday. And then boom, the economy tanked. And so that gave you its own share of learnings. 2007 was similar, reacting to that. And at Rogers, we were heavily invested in auction rate securities. And that was a time when here's cash that was supposed to be liquid, same day availability, and suddenly you cannot get this money. And if you have a significant portfolio, then that's a significant issue for you. So that was a key part of riding through that time. And so I think now it's having that history, that experience already. We have gone through 2 cycles, and it creates a degree of centeredness that there's no panic really. Yes, in March, we were saying, what the heck is going on? And you'd think the worst. How will business fall off? What level will it go to? Where do we need, what level of our playbook would we need to pull out to manage, to react to this crisis? But there was a playbook, we have been here before, and we could use those learnings to guide how we act. And so for me specifically, it was about keeping a sharp rein on the liquidity. Where's our cash? How easy it is to access? What's the status of our creditors? Are they ready to lend? Can we access our financing? And then managing business continuity. How do we operate away from the office to make sure we keep the trains running as far as payments and collections were concerned? And then insurance risk. Lots of people working from home. Are you prepared to facilitate that environment? So I would say we are much more prepared for this, which has turned out to be quite a challenge so far.
And to some degree, a number of people I've spoken to have said, whilst it's hard going through these situations, it's actually the most enjoyable time in Treasury in these sort of pandemic and GFC type scenarios. Would you agree?
Yes, I think once you know that what you're doing makes a difference and it is necessary, and there's no doubt about that. When you think about liquidity, payments, collections, managing a credit facility that you need to draw on, you feel that you have value. You know that, you can feel it. And so being in that position is a great opportunity for us to shine. Now, you could mess it up, but there's more upside there if you simply do your job.
Totally. And can I ask then, would you see a difference between the management consulting space and the manufacturing time, like between Rogers and your 2 consulting firms? How does Treasury differ, and where are the similarities between the 3?
Yeah, there's some key differences. I would say with the consulting firms, both firms are private firms. So we do not have that external quarterly pressure to meet certain targets. Yes, we run tight ships in terms of managing our plans and reporting on a monthly basis as to our progress. But you do not have that external pressure to meet investor expectations. So we have more room to be more strategic, to weather some of the downturns a little bit more. And take something like FX risk. When I was at Rogers, we hedged FX and commodity risks to a high degree because we want to manage that quarter by quarter profit number as much as possible. At Bain, we do not have that pressure. We're able to ride that out some more. So that's a key difference. So it's an external view versus the internal pressure. And then there are some other things that would apply more with Rogers, again, tied to FX, the need to have more hedge accounting affirmations in place. And then the big difference between manufacturing and the service industry, where the insurance risk, the structure is so different. One is service, one is heavy manufacturing. So there's a big difference there. But I would say, though, the similarities are quite significant, because we have the same challenges of what systems do you use to pull it all together for a global company. We are still concerned about efficient bank structures. Do you do cash pooling? How do you structure your banking for efficiency and security? There's a risk mitigation via insurance. What policies do you take out? What deductibles? What retention? What deductibles? There is the issue of liquidity management. You still have to move money through the system. You still have to access your external financing, and to what degree. And then importantly, there's M&A as well. So even though one is service and one is manufacturing, there's so much in the realm of similarities that the skills are largely transferable, in my opinion.
And I would say in a partnership environment, private, they're probably the toughest shareholders you can possibly have, right?
True, that's true. And it's close, because you go to a board meeting to present, you're talking to the owners, and we're doing presentations for them on a regular basis, and you're getting that feedback of what is it that is important to them. I feel as if I get a much more intimate read in the private company than public, because we are presenting to a subset, and then within the bigger group, my boss, the CFO, is then sharing their reactions. So, and then we're running into them on a regular basis, because they're our partners, they're in the office, we're communicating with them on different matters. So yeah, it's a tough group, but fortunately, it's an understanding group for the most part, and a fair group as well.
A question for you unannounced, but you mentioned one of your big achievements was coming to the US as an immigrant and really slotting into corporate life there in big firms. How did you find that? I mean, in my view, I kind of think of the West Indies, and it's a lot smaller. It's a very culturally different place. How did you find that transition?
So I would say two key reasons. One was my undergrad course, where I was at the University of the West Indies, and it's a university that's based off the English system. So this formal education structure, it lends itself to a professional ethos, where the way we approach management studies or finance is similar to how it gave us that leveling of the playing field with kids in the US, in terms of us going through this rigor, that going through that program, it really helped to bridge the gap. But maybe the single most important piece was the fact that my job out of college was as an analyst with Procter & Gamble. And P&G, as you know, is one of the world's best managed companies, certainly when I was there. And that professionalism, that quality of leadership, product quality, marketing quality, those rubbed off on us in a significant way. So coming to the US, having that experience, I think prepared me to a great extent. And then having my wife to be my coach as well, to get immersed in the system, was another key advantage for me.
And I mean, really, P&G's the gold benchmark, really. It's hard even to get into that company, let alone to excel. So I think, the fact you got in there was a good testament to yourself.
Yes, I really enjoyed it, and was grateful for that opportunity.
What has been your approach to networking throughout your career, Easton?
So what I would say, and being in the really mature stage of my career, for those who are listening, especially our younger colleagues, I would say, start as soon as possible and be as thoughtful as possible. I think when I look back, I could have done a much better job of networking early. And what I mean is that with networking, in my view, both as somebody who may network for my own benefit or to be a support for others who want to build a network, you don't want to go to someone when you're looking for a job and say, oh, I know Easton works there, can I get an in? But really build authentic relationships where you say, Simon is a treasury professional. Let me reach out and build a conversation, learn from him, share ideas. And then, as one of your guests had pointed out a few weeks ago, he was in touch with someone, wasn't looking a job. And then at some point on, somebody said to him, you know, there's a job somewhere. I think you'd be a good fit for that. And to me, that's the ideal networking structure, that you don't go to someone just so you can get a job or something that is an immediate benefit to you. So I would say start sooner to build those relationships and spread a wider net. And looking back, that's what I would have said to my younger self. So I'm a big fan, but I didn't do it well enough.
And I think the key there is, you know, building relationships or networking, whatever you want to call it, is it's not about the here and the now. It's a long game, and you need to just think about that long game rather than the here and the now. But also, you're right. It's hard to go when you need a job. Treasury is not that place that there's always a job. It's a bit of a, like, if a good job comes up, now's the right time to move, even though it might not be the right time for you to make that move. So yeah, I think there's 2 points that are really valid there.
Yes.
What about mentors then, Easton? Have mentors been a part of your career and today?
Yes, and it would go back as far as when I was a kid, that my first mentor was my grandfather. He was somebody who loved to read and he was a big fan of education, and he would share those values with me, encouraging me to read, to invest in my education as much as possible. And then in high school, having a math teacher who would encourage, who would push me as much as possible. Math was not one of my strong subjects, but she would encourage and really communicate the value of math. And then significantly, when I was getting ready to go to college, she said to me, what program are you thinking of pursuing? And as a country boy, growing up in a farming community, having a romantic notion of farming, I said, I want to do a degree in agriculture. And she looked at me and she said, don't do agriculture, do management studies, because when you do management studies, you know how to run your farm if you're to have a farm. And that was my entree into the world of business and finance. So every now and then I look back and say, what a moment for me. Now, I may have a different path that would have turned out just as good, but I love the one I'm on, and she had a significant influence in that path. I mentioned my wife a short while ago, and I would say for the past 30 years, she has been my most consistent, most critical, but also most supportive mentor in looking and saying, I think you have a weak spot here, you need to work on this, or I think you're good enough for this role, you should apply for it, or you've been here for 7 years, it's time to look for something that would propel you some more. And I would say, yeah, by far and away, she has been my most important mentor. And then on a more ad hoc basis, I have friends who I will go to for a particular need. Within the professional space, there are a few treasurers I've reached out to from time to time. There's the treasurer at Boston Scientific. I want to mention him because he stood out so much for me, Bob, because when I was really new to Boston and we had a treasurer's forum, Bob really welcomed me to that forum, and I wasn't anywhere near to being a treasurer at the time, but he was so embracing, and I was like, why? For no reason, no benefit to him, he was welcoming and helpful. And then later, when I had to make a significant decision, I had another great opportunity when I was contemplating Bain. Very good firm. The compensation was attractive. And I called him and said, I need some of your time. And we had a great lunch, and he really delved into it, really slice and dice with me for me to help to look at the options and to decide for myself what would be the better choice. And so I am indebted to him for investing that time in me to help me in my career. So yeah, I would say I benefited a lot, and I will always look back at mentors and, appreciate them for what they've done for me.
Absolutely. And you mentioned like you would do networking better at an earlier age. What are the other things that you think, if you had your time again and you were sitting down with a 25-year-old you, what would be the things that you would recommend for the listeners out there of the things you wish you had have known back then?
I think I would want to develop a clearer view of what the path looked like in the treasury field. So when I got into treasury, I was an analyst and I was just happy to be there and think, okay, maybe I could become a manager, but didn't have as deliberate a plan as to becoming a treasurer and then maybe what's beyond that. So I think to the extent you can map out a path and sanity test it with others. How do I get there? What part of treasury would I really like? Do I want all of it? Or do I really want to delve into, say, capital markets, risk management, be more focused in certain areas, or be, you know, a generalist covering all of treasury to become a treasurer? I think having more insight into what was possible would then prepare me more quickly to move through the process of getting to where I am, maybe, you know, a few years sooner. So I would say that would have been key. And then I would encourage younger folks to look at the breadth of resources. There's so much that's happening within Treasury that each day you could be inundated with something that is significant, whether it's on the technology side, the security side, insurance, what's happening in the capital markets, what's happening in investments. And then when you layer on global, there is so much to think about. So I would say take advantage of resources, podcasts like this one, because even I am now a treasurer, but listening to your guests, it was extremely helpful because I could say, yeah, I went through that experience, somebody else did, I could draw strength from that. And also I can learn. Even at my age, I can still learn. So, you know, it's really getting as much information as possible, whether it's through AFP, as I said, podcasts, seminars, utilizing your banking providers, your insurance providers to help with content. Because the critical thing is all of this represent what you can bring to your company and to be of value. So the more value you can be in your company, it's better for your career. And learning, maybe you don't put it in practice in your current company, but it's going to prepare you to go somewhere else and you know, be even more successful. So let me pause there.
Can I ask, Easton, in terms of hiring and when you're looking to bring people into your business and your team, what is it that you really look for in your direct reports?
I would break that into maybe two levels. So if I'm looking at somebody who let's say we want an entry-level person coming in as an analyst, obviously I am not overly concerned about experience. And treasury is largely a learn-on-the-job profession to a large extent. So I am certainly looking for the softer skills, ability to learn, intelligence, the willingness to learn, as I mentioned, the willingness to work as part of a team, a comfort with problem solving. And for me, because I am so focused on the international sphere, I want somebody who's comfortable with that as well. I don't want you to come and think, okay, I'm going to work in just one market, but you have to be mentally prepared to say, I could be speaking to someone in China or in Chile. You know, that's our world, right? And so I tend to gravitate towards the softer skills. However, if I'm looking for a senior role where the experience is going to be obviously valuable, if you've worked in that silo, if you're telling me I have experience in capital markets and then M&A due diligence, then I want to hear that. I'm not going to be happy if I'm not seeing what I would like to see based on you having that experience. If you're a senior professional, but you didn't work in, say, insurance, okay, we can teach that piece. But as long as you have worked in that vertical, then I expect you to know it, right?
Totally understand.
And then it becomes more important then, of course. Yeah.
What about, as a treasurer, what do you perceive as the things that the CFO, the CEO, the board, what is it that makes you successful in your role in their eyes?
I think for me, one of the big ones is the ability to show that you're aligned with the corporate objectives, whether it's the company-wide objectives or the finance objectives. And that is what I'm looking for, to say, how do I show my value in the company? Yes, I can be working on something that's very important that another treasurer would say that's great, but what's the goal of the company? What is the company working on at the moment? And how could I show the CEO that I know what's happening and I know how I can contribute to that, and I am contributing to that? So I would say, make sure you're aligned. Know your goals and make sure you're aligned with them and you're working on things that show a direct connection. The second thing to me is to control your verticals. And when I talk about verticals, I'm talking about the different functions, whether it's insurance, FX, liquidity, investments, cash management, all of these, because you're the treasury person, right? Nobody should know that more than you. And at any point, you should be the person, whether you are someone within your group who is able to inform the leadership of these different functions. There's no way you're going to build credibility if you don't own your space. So that's a second key one for me. And then the third one is making recommendations. How do you present something? Be prepared. I've been at board meetings. I've seen senior executives coming into a board meeting saying to the board, we should buy this company. Let's spend 50 million, 100 million to buy this company. And the board doesn't have a presentation to look at. You're not giving them the specifics on the financial benefits or any other synergy related item. And the board is saying to you, why should we do this? We don't know. And it's an embarrassing thing to be in that position where the CEO or the board is saying to you, why should we support what you're saying? So make sure you can defend what you're presenting. It's about, why should we do this? If we don't do this, what could go wrong? Right? And make sure you have your story straight.
Absolutely. One final question for you, Easton. Technology is obviously changing things very rapidly at the moment. How do you see the role of the treasurer changing in the coming years?
Technology is critical, and there's a practical consideration, because we're all, as companies, we are looking to say, how do we manage costs but stay, still deliver value? It's that conundrum of minimizing costs but still deliver what's required by the company. And so technology is the answer. It is critical for us. Treasury groups are generally small, so there's even more pressure on us. But I look at the changing landscape as an exciting opportunity, because if a firm is saying to you, we're not going to grow headcount apace with business growth, well, my challenge to the firm is, if we're going to deliver, you need to give me the technological tools to make that happen. And so when you look at the space, APIs came out, RPAs, we're hearing about virtual bank accounts, we have the different treasury management systems, we have the challenges of linking into ERP systems. I think as treasurers, we and our teams have to stay abreast of these developments, because the companies are doing it. Bain, for example, is pushing the digital revolution. So it would be bitter irony if we're not staying abreast of that ourselves. So it's extremely important, and I think we have to stay abreast of the developments and see how we deploy them to minimize the amount of manual work we do, to limit mistakes, and to really show a good, that our budgets make sense, because we are using money wisely while still delivering at a high level for the firm. So I'm excited about this. It's a little bit daunting, but it's more exciting to me than daunting. Still there?
Easton, thank you very much for your time. Hello and welcome to the Treasury Talent podcast. I'm your host, Simon Lynch. Today I'm joined on the podcast by Easton Dickson, who is the treasurer at Bain & Company. I wanted to get him on because Bain is a very big global management consulting firm, and I thought he'd have some great insights. Plus, I could listen to his dulcet Jamaican tones for many, many hours. So I hope you also enjoy listening and get a lot of insight out of Easton today. I look forward to chatting soon.